C3.ai stock is down 26% year to date in 2025, but the company recently reported quarterly earnings results that pleased stock market investors and sent the stock price higher. Of course, I have not had C3.ai stock rated as a buy. I've had it rated as a hold all year long in 2025. And if investors followed that recommendation, they would have avoided this 26% decline year to date in C3.ai stock. But since the company updated its financial results, I incorporated those results and I updated my recommendation for C3.ai stock. I'll let you know if I think this stock is a buy, hold, or a sell after it reported its quarterly financial results. I'll share with you my proprietary discounted cash flow valuation model, which calculates the fair value for C3.ai stock. Let's get into it.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the first thing I want to evaluate with C3.ai is the company's revenue growth in recent years. In that regard, it's done a great job increasing its revenue from 91.6 million in 2019 all the way up to 389 million in the most recent trailing 12-month period. What's more, management forecasted that for the fiscal year 2026, it will generate revenue between 447 million and 484 million. If you compare that with the most recent trailing 12-month period of 389 million, it would be a solid increase of roughly 20-25% year over year. Already, the company has generated compounded annual revenue growth of 31.7% between 2019 and the most recent trailing 12-month period. C3.ai has done a solid job of boosting revenue, and that part of its business has not really struggled, save for a brief moment in 2022 when most tech companies struggled as a result of huge fears of a recession that happened. Remember, that's when the Federal Reserve, the central bank, started increasing interest rates, and that's when there was a big slowdown in tech spending overall. Where C3.ai has had trouble is in the unit economics. If you read my book, you know that I look at 6 things when I'm evaluating stocks, and the customer value proposition is one of them, which I measure. One way I measure that is through revenue growth and customer retention ratios and satisfaction surveys, etc. And another thing I look at is unit economics. There's a whole chapter on that. And I talk about how it's easy to generate revenue growth if you're willing to take losses on the bottom line. You just offer your customers a great value and you sell it to them at a relatively low price. Your customers are thrilled, but then you're losing a lot of money on the bottom line. And that's where I find C3.ai. It's losing a lot of money on the bottom line. The return on invested capital, negative 157%, and it's getting worse. It's getting worse from negative 60% in 2021 all the way down here. So it's offering customers a good value. It's generating revenue growth. It's signing new deals. It's expanding customer relationships, but it's doing so at the expense of its bottom line. So the negative 157% in ROIC, not a very good number and heading in the wrong direction. The next thing I wanted to look at is operating cash flow to sales. And by the way, I'm getting all these charts from finchat.io. There's a link in the description for a free 2-week trial and a discount if you choose to pay for the premium version. The cash flow to sales ratio for C3.ai has been improving dramatically, and that's been great news for investors. From the low of negative 43% in 2023, it's jumped all the way to negative 10.6% in the most recent trailing 12-month period. So that's been a bright spot for C3.ai stock investors. Now that we looked at the critical financial metrics, let's look at valuation. And let's start backwards. Let's start with the outcome, the output of the calculation. And I calculated an intrinsic value per share for C3.ai stock at $27.44. The current market price is $25.62. So very close here in terms of the calculation. And when it's this close, I like to leave a margin of safety of between 5 and 10%. So in this case, I would say C3 AI stock looks slightly undervalued or fairly valued in that range in this calculation. Now, the company is an above average risk here with a beta of 2.05. The cost of debt I've applied here is 0.85 or 8.5% because the company has relatively little debt and a very strong balance sheet with 730 million in non-operating assets and less than 5 million in debt. So because of that, I've given them a low cost of debt here at 8.5%. But the debt to equity ratio, I've given them a target capital structure of 10% debt and 90% equity. So the biggest cost of capital here is coming for the company's equity. And overall, the weighted average cost of capital I've applied for C3 AI is 16%. So I'm forecasting that the company turns free cash flow positive in the year 2028 and continues increasing that free cash flow from that point forward with a transition period growth rate of 22.5%, meaning from the year 2030 to 2034, I'm forecasting it'll increase its free cash flow by 22.5%. And I'm also forecasting that it grows its free cash flow by 5% in the very long run between 2035 and infinity. So I'm giving them a generous long-term growth rate in free cash flow and also generous growth rates in terms of the short term and longer term for the company because it has generated great free cash flow and it's operating in the artificial intelligence sector, which is forecast to grow significantly between now and the very long term. It's one of the highest growth categories of any industry I'm following right now. All right, so all that being considered, do I think C3 AI stock is a buy, hold, or a sell? Well, I have the stock rated as a hold, and I updated that recommendation on June 3rd, 2025. The company is fairly valued to slightly undervalued, but it doesn't deserve a buy recommendation when being fairly valued because of the other categories are not that great in terms of the company's unit economics, especially is not great. The company is generating bigger negatives on the ROIC metric. The operating cash flow to sales ratio is improving. Revenue growth is solid. The industry, the total addressable market is excellent. All of that is really good. The valuation is fair. It's almost there. I would say it's closer to a buy uh, than a sell. But in terms of right now, the valuation compared to all of those factors, it's still a hold. So I wouldn't be surprised if the next move is an upgrade for me of this stock, but I'm not quite ready to upgrade the stock just yet. It's almost there, but not quite there. Uh, Great progress from C3 AI. I wouldn't be surprised if I do upgrade this stock before the end of 2025. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.